What's up? Can you hear me?
Yeah, man, I'm good. How you doing,
Hey man, I'm doing good. How you doing?
bro? You know how it is. Another day in paradise, brother. Another day in paradise out
How
here,
you how you feeling?
bro. It's rough, man. This Achilles is no joke. I would recommend nobody have to do that, man. It's just I don't even, man. I got to go to rehab twice a week, and like they got you trying to do all this stuff. I got crutches and boots and everything else, man. It's crazy.
All right, man. Let me get some housekeeping items going on before we jump straight into the Q&A, man. I just wanted to make sure because I know you had a spill, man. So I want to make sure you
No,
good. I
we're
know
good. We good, brother. We good, man. I
I
appreciate
want to.
you. I
Yeah, I
appreciate
want
you, little brother. Trying to.
to.
I appreciate that.
Hey, yeah, man. You gotta make sure big bro good, man, because we
That's
need
right,
these
man.
gems.
Oh yeah,
We
yeah,
need
yeah. I
these
got
gems. All right, let me send a message out to the people who signed up.
you. Okay.
They signed up to. Let's see. Boom. Gonna put Savoy. Yeah, man. So how this market looking, man? I mean, we it's so much going on. I know the market's probably gonna be crazy tomorrow because of
Jackson Hole.
the student loan situation. So,
Well, I
um,
mean, even bigger than the student loan situation, it's Jackson Hole. Everybody's wondering what the Fed guys are going to say. I don't think they're going to say that much, but the worry is that they're going to increase interest rates by some degree, right? So, I mean, dude, I'm doing all right because because I told you it's like, oh, they're raising interest rate. Like the rules are clear. Oh, they're raising rates. I just purchased a bunch of um, oil and gas. Like, if remember when I told you, like, yeah, I'm just gonna get Exxon because interest rates are going
yeah,
up, and then
yeah,
materials. Like when the Ukraine thing hit, oh,
yeah.
dude, yeah, I just got a bunch of commodity and material stuff. So I'm like, and that is like overweighted in my portfolio. Like that's at probably like 12%. Like in the S&P 500, it's probably 5%. So
Right.
I'm doing. It's like I just, but I mean, I just knew. I just like you just there. It's math. You know what I mean? But
Yeah.
it is interesting. I mean, especially when you look at the timing of all this stuff.
Yeah. I think it's gonna be really important too to just talk about how all of this stuff tie in because a lot of times we hear this stuff and we don't really know what's going on.
Oh, for sure. Yeah, I'm gonna just talk about there's a reason every single time you and I talk to Mike. Okay, so let's talk about interest rates. We're back before when growth and nobody was talking to us like I always started with. I'm gonna look at bonds. I'm gonna see what the bond markets because it definitely will tell you like what to expect. You know what I mean? And in a
Right.
non like I'm not wishing about it. It's just like that's what it is. But
Um hold on. We almost there.
I do. It's all good. I'm pulling up my own. See, my own portfolio. I'm seeing what it is. Yeah.
Oh yeah, we need that. We need that. We need hold on. Why is it not? I hate that it did that. All right, give me a second, guys. We need that. Most people are coming in. They just coming in. So if you're just coming in, share this out to somebody you love because we're going to be talking about money. We're going to be talking about your investment portfolio and your investment philosophy, which is really, really important. And we're going to talk about some of these events that go on that impact your money because a lot of times, you know, especially in the black community, we're always reactive to stuff. And we're always at the end of we're always at the end of the totem pole, which means we don't make the money. When in 2020 when things were going crazy, that was like a lot of our first time ever getting in the market. But if
Yep.
we would have been in the market, since 2018 or since 2008, we would have did a lot better compared to just getting in when everything's popular and when everything's hot. So that's something that's really, really important that that I had to learn is you got to get in and stay in the market. You can't keep um just jumping in and out trying to time the market. That's thing. Masterclass. And keep jumping in the time to market. Once I get this sent out, guys, we're going straight in. Boom. See, why does it do that, man? I don't know why it says that. You know me, man. I stay with a problem. I stay
Every
with a problem on this, man.
time. Every
It
time.
don't.
Look, you
It
got the
don't.
studio. You
It
got the
don't
studio.
fail.
Oh man.
Yeah, man, it don't fails, man. But all right, let's get into it while people are waiting, because I know it's a bunch of people who are here now.
Okay.
Um, just introduce yourself, tell people who you are, what you do, how you got into investing, because a lot of times there's always new people coming in, and if we're just talking, we got good rapport, but a lot of people may not know
Right.
exactly who you are. So let's do a quick jump into that while I
Yeah, well,
get this
everybody's
text
loading in.
message right.
Yeah, yeah, most definitely. So my name is Savoy Brummer. I am a self-made millionaire, and James and I, we've been talking for probably like 3 years now, just about investing. And I always tell folks that it's really important that the big brother that I am make sure that the little brothers and sisters that are out there don't make the same mistakes that I did. I am a executive for a multi-billion-dollar healthcare company. I am a venture capitalist. I've started my own startup companies. Um, just did a company with COVID in Hollywood. I do a lot of that kind of stuff, and in general have really, I would say, over the past 15 or 20 years, taken my experience in terms of Main Street and applied it to Wall Street. So I've had lots of opportunities in dealing with private equity, VC, um, and have done pretty well with it. I think that the lessons that you're talking about are very pertinent, right? So if you just started in the market, um, if you're a millennial, some Gen Zers just got in, it was really cool with growth. The market only looked like it could go in one direction, and then kind of seeing like how the cyclical nature of the market is, it can be a little bit confusing. And
Mhm.
so, but there are general rules that you and I have talked about, and I think that we've made people, some pretty good return on their investments. Um, that I'm not. By the way, everybody, I'm not one of these talking heads that you will see on cnbc. All the things that we talk about are very much so my own personal portfolios. You guys can kind of hear about my own risk tolerance and James, and kind of see like, really actually what is Savoy doing right now to invest in the market, and what are the things that are coming up in the next 6 months versus the next 6 years, because they're two completely different situations.
All right, let's talk about one of the elephants in the room that I think a lot of people in my audience would want to hear your thoughts on, inflation, and
Yeah,
how student loans getting I mean, what do you call that, getting
that they're getting axed, man. 10 grand, 10 to 20 grand, depending on
yeah,
the origination, are
10 to
being
20.
yeah. Hmm.
Yes, $10,000 to $20,000. So 10,000 if you don't have a Pell Grant, 20,000 if you do have a Pell Grant, or if you did receive a Pell Grant going through college. And basically what a Pell Grant is your parents made a certain amount of money, or they didn't make a certain amount of money, so you
Right,
were eligible for
right,
a Pell Grant. So for those who's saying, well, why is it 20,000 versus 10,000? That's basically the difference. One person grew up and they didn't make enough money, or they wasn't privileged enough to probably get a full ride scholarship, or their parents couldn't pay out of pocket,
right,
so they had to take out student loans, but they made too much money to the point where their parents couldn't get a Pell Grant. So
right.
there's a lot of gray area when it comes to that. Um, and I know I for sure received a Pell Grant, but I now make too much money to actually receive the
The benefit from it.
the benefit of
That's a
it.
lot of, well, right, that right there is what you're going to hear a lot of. Like, oh, I either repaid it back, or I've done X, Y, and Z. What are you doing for me? And the answer is, well, you're not going to get anything, right? You and I are fortunate enough to not have to not be eligible for any of these things, right? So, $10,000, and the Biden administration is going to be releasing a certain kind of information for you to apply to, so that you can take for any federal loan, not a state loan, but federal loan, you can be forgiven $10,000.
Hmm.
And the Pell Grant, again, you've got to basically have not made as much money, or at least your parents not made as much money, and be eligible
Right.
for that. But the only problem is that, not problem, but in January, you're going to have to start, since 2020, students haven't had to start paying back their loans. But
Yes.
starting in January, you're going to have to start doing that again. All right. So just everyone be prepared now and get your financial house in order, and understand that if you have been deferring those loan payments for the past 2 or 3 years, now is a time where, in the next 6 months, you're going to have to start doing that. The good news is it won't be as much money as you had originally planned. The second piece of that is that they're actually going to uh, have riders that are in there that says you don't have to pay up to 10% of your discretionary income that you have available. It actually goes down to 5%. And so you will be paying, you'll have to pay less money. And then again, it's all up to you as to the rate of doing that, because as we've talked about, and what we're about to talk about, are interest rates. And the rate by which you repay these things might be some of the better investments that you're going to make, even though you don't necessarily have to.
All right, so all right, let's jump straight into this. Okay, you are someone that done really well for yourself. You took out a bunch of loans. Well, and I wouldn't say a bunch of loans, but you took out debt in order to go to school.
That's right.
You can write a check tonight and pay it off. What would you recommend to people who are in that position and maybe let's say they got 30, 40,000 saved up?
Right.
What should they do? Should they write that check or should they, what should they do?
So my advice in terms of personal finance: number one, pay off your credit cards. Right, your credit cards have the highest interest loans that are out there, and it's just dead money that's sitting there. The second thing that you should do is, if you have a match from your employer, you should definitely invest into your 401k even before paying back your student loans, because again, you're getting more of a match from your employer. Um, the question with student loans really revolves around what interest rate that you have gotten out of, right? So, my interest rates when I was in school, when I went to med school, and you're absolutely right, NYU wasn't free at the time, it is now, but, we had to pay a lot of cash for that. And so that is, um, uh, the interest rates were half as much as they were, before. So I would say that if you have over $100,000, if your rates are, I would say over 4%, you're gonna have to start thinking about, well, do I go with a sure thing 4%, which is not bad, or do I just go ahead and deal with going into the market and looking for some opportunity? But
Right.
definitely take out your credit card debt. Whatever you do, that's the number one thing. But you do have options.
All right. So I guess the direct question is, should you be focusing more on paying off debt or investing? Because you got the Dave Ramseys of the world who says pay off all your debt before you start investing. And it's a lot of people in our community that subscribe to that. So
Yeah. So I
I want to
don't.
get
Okay.
yeah.
So I mean, debt is so. There's a great thing that I saw on Instagram where there was a billionaire talking to a millionaire, and he was like, "Well, why am I a millionaire?" And he's like, "Because you don't think like a billionaire." He's like, "Wow." And it's the same thing. If you're going to get to a certain place, you have to understand that like debt is a tool, right? Debt is a tool for doing things. I have could get rid of every debt that I have, but that doesn't make any sense, right?
Right.
Strategically, I try to get either debt that I can write off, like a mortgage, like certain investment type of items that you and I have talked about, like if you're going to buy an oil well or something, like there are certain things that you can do to write off that are tax deductible, and you can actually decrease your income taxes. So investing in your 401k. Investing in your 401k is not just about the match, but it's also, taking down your taxable income, which in certain states can be extremely high. And if you make a lot of money, that's a much better investment over the long term than just paying down some nominal amount of student debt, right? So for
Right.
everybody, it's not a hard pass. I would say that probably for most of you, I would definitely start investing early. I would invest. Like, let me tell you something, man. Like, this is a time where you take risks. This is the time where, if you fail, you have the rest of your life to clean up after those decisions. So whether it's you investing in a business, whether it's you investing in the market, you need to start investing now so that you can, get your rewards. I'll give you a really good example of that. Is that my daughter is 15, right? And so
Right.
when she was born, we put our money into a 529 account, right? 15 years ago. The total amount of principal that I put into that account was about $30,000.
Mhm.
Now her 529 account is worth $135,000. So over 15
Mm.
years, this is almost quadrupled in the principal that I put in, right?
Right.
That's going to be tax deferred. She gets to take out without taxes at all. And so, for her college, for her graduate career and all those types of things, over the 15 years, let's just say that's because I just decided to invest early. It's a multiplying effect. So I would not just say, go ahead, pay off your student loans, but I wouldn't just say, just ignore them. I think that, your student loans are typically a reflection of the investment that you made in yourself.
Mhm.
Get yourself together. Again, take advantage of paying off your credit cards, taking advantage of your employment and your matching and participating in the market. And then afterwards, when you have all your money left over and your responsibilities, then you say, well, you know, maybe I put an extra payment a year into my student debt, but then I'm
Mhm.
going to take the rest of my money and say to myself, let me go and participate in the market so that I can learn, so that when I'm in my 40s and my 50s, it's not the first time that I've ever seen the market, and I'm not so scared of market cycles that I'm going to make bad decisions. Right?
Right.
You have to be in the market and feel it. Like now that you've been in the market long enough, you've seen when the market goes down, and you're not a deer in headlights, but you're able to really think rationally and say, well, everything's on sale. So what are the best things that I can do for this next chapter of the market? So that's my real advice to young people. Take chances, invest in yourself, make sure that you diversify. Don't put all your money into one thing. Don't put all your money in the stock market. Don't put all your money into student loans. Diversify the things that you're doing. It will totally pay off.
All right. Now let me ask you more of a direct question, right? Because a lot of times when people hear millionaires speak, or even billionaires, or somebody with a higher net worth than them, a lot of times people think some of the stuff they say is so simple, right? And it's like, well, if I do that, like you just said, diversify. You said continue
Mhm.
investing, stay in the market.
Mhm.
What are some of like the mindset shifts? And then we're gonna get right into the market currently today. What are some of the
Sure.
mindset shifts that you had to make in order to start investing your money?
Yeah.
Because you are a trained doctor, and for people who don't know that, and you actually told me this, you were saying like doctors are one of the highest professions to go broke.
Oh
And
yeah.
I didn't
Oh,
know that, because I'm like, I mean, well, they're making all this money, but you were like, no, but they're spending a lot of their money. And the fact, the way they became a doctor is the reason they're broke, is because they studied medicine for 12 years and now they
exactly.
never studied money. So now they're making all this money, but they're never doing anything to invest their money. So what are some of the mindset shifts that people need to make?
Yeah. I mean, you're exactly right. Don't think that you know more than everybody else, right? So, I'm a don't have hubris. You know what I mean? Don't think that that you understand the market better than anybody else. Have a healthy respect for the market. I think some of the things that I wish I would have done earlier as it relates to the market is I think some of the best investments are the most boring investments, right? Like going to a S&P ETF and you're like, well, that's all I have to do. It's like, dude, one of the best investments you're ever going to make is just, putting your money in a general S&P 500 ETF and just letting it ride.
Okay, so for the people who don't know what an S&P is, what is the S&P?
Okay, so the S&P 500, Standard & Poor 500, are the 500 largest companies that are publicly traded in the market. Okay, and so you
Mhm.
take those, and they represent communications, energy, financials, technology. and all the companies that you hear of, Apple, Microsoft, and you kind of put them up there, and it's a blend of all of the major companies, of the largest major companies that are represented here in the United States. Really simple. Just, you don't have to think, well, should I invest in Apple, or should I invest in Microsoft, or no, this is like, you're invested in a little bit in all of them, right? So the good news, again, this goes back to my general idea of diversification, which is the second thing that I learned, is that you're going to take some L's, you know what I mean? Like, you're going to take some hits to your investment portfolio. The key is to be able to take these hits and not have it ransack your entire financial plan, right?
Right.
You're going to make some money off of some really good calls, but it shouldn't be so much where like one thing that you do sets you for life, right? That's not a measured, kind of wise thing. And most millionaires are very kind of measured in what they do. They're a little bit boring. They understand that there's risk that's out there, but at the same time, they're not fearful of risk, and they're not, and this is a really big thing for young people. And this is the one thing you got it. Like, very first thing that you said, you got to stay in the market, right? You cannot decide that I had a negative experience. Let's say some of you guys, for the very first time, put in money in the market in March, okay? And you said to yourself, this is my time. I'm going to put it all in. And now you see your accounts lessen and say, I'm done with this. I'm done. I'm never going to participate. It does not work like that. You know what I mean? This is a steady as you go, continual investment in yourself. And so if there's anything that, I want all of you all to understand, is that you need to continue to participate to make big inroads. For me, I have been a part of the housing financial crisis. Oh, everything went to hell. The .com bubble. Yep, part of that. All of them went to hell. Yep. The post-COVID thing. Yep, all of it. So I'm not that old, okay? But in my professional career, I've had 3 times where the market dipped at least 25%, if not, closer to 50%, right? And yet I'm still telling you, like, dude, you can still make money in this market because I just kind of stuck with it. So it's very, like you said, timing is one thing, but perseverance, completely a different one. And so make sure that, again, when you diversify, you're able to do it. Now, that's not to say that, let's say you invested in some random stock and you keep on saying to yourself, I'm going to invest in that stock. Yeah, it went down. I'm going to keep on with that over and over and over. Don't do that, right? Every year, and we're going to talk about this, but every year you got to, you have to take a step back. You've got to look at your portfolio, and you have to think to yourself, well, in this economy, this is not the economy of the 1990s. This isn't even the same economy of, pre-COVID. This is a completely different thing. So what are the smartest things that I should be doing to prepare for this economy for the next 6 months, a year, those types of things? And those are the types of activities where, again, listening to your show and you and I talk about this all the time, understanding, how the economy works will help you make the right decisions.
All right, now let's talk about. So we kind of talked about the student loan. So for the people who are just getting in, we talked about the student loan situation. But let's talk about another thing that a lot of us overlook, because this is one of those things that it's not sexy to talk about, but it impacts our money. It impacts our 401k. It impacts all the other investments we make, and that's the Fed, right? So you said there was an announcement that the market is going to react to based on the Fed. So could you break that down and explain what that is?
Okay, so first, I'm going to go back just a little bit. So this is the most important technical point for investing in this market, a bear market, okay? And the bear market is a market where the prices of the shares of the S&P 500 have gone down 20% from its highs, okay? So if you had a major investment that was worth $100,000 and now it's worth $80,000, it would then be defined as a bear market. The
Right.
average time that there are bear markets all the time. And for you guys that think that the markets has just gone up, a bear market is actually a healthy sign of an economy, typically. Okay. The U.S. stock market has been in bear market. The average over the past 20 years is about 8 months or so.
Mm-hmm.
This particular bear market that we're in right now, right, 20% retracement has been 8 months. So there's a whole camp of people who are saying, well, it should get better, sooner rather than later. Then you have to understand, like, why did all of this, supposedly happen, right? The inflation has occurred, and inflation is the rising cost of your goods and services. So if you go out and you look at the gasoline pump, all right, or if you go out and you try to buy a car or any goods or services, you've seen that those prices have gone up significantly
Yes.
recently, right? And what the Fed is a part of the government that looks at the economy. And the number one thing, if you look at history, right, you look at the 1970s, the gasoline, scares. The number one thing that the Fed wants to do is to tame inflation, because for working class people, they can't even fill up their gas tank anymore. They can't do these things, and inflation is something that there aren't a lot of tools that you can deal with except for increasing your interest rates, right? So if you will see the 10-year treasury, you and I always talk about your 10-year treasury is over 3%. And what that has done is it's created a situation where if you've tried to buy a house, I don't know if any of you guys have tried to buy a house lately, your payments have gone up, 50% than they were just 6 months ago, because your interest rates have gone up from, let's just say, 2.5% to a little bit over 5%. So what happens is that for companies that grow, right, we have growth stocks, companies that grow, money has become much more expensive, right? So
And let's define. Let's talk about a few different growth stocks so people can wrap their mind around what
right,
growth stocks are versus value stocks.
great. So a growth stock is one that is increasing share rapidly.
Like Zoom.
Like a Zoom, like to some extent, I think Zoom is great. A Shopify, um, some of these technology stocks. I would say a Microsoft and Amazon. A lot of the big tech. But then there are smaller ones, right? There are smaller ones like what's that telehealth one that's there? Any of the ARC innovation funds.
Not Teladoc.
Yeah, like Teladoc.
Teladoc. Okay.
Yeah, like Teladoc, Square to some extent. All of these are growth companies that they were just exploding. And why could they explode? Because they could borrow money super cheap. Take it on a personal view. If a lot of people were buying really expensive big houses because their payments were super small, right?
Yep.
And so you could buy larger houses because your interest rates were low. Same thing applies to bigger companies. And so what happens when after COVID, right, everything shut down? What did and even before then, right? What did the Fed have to do? They had to lower interest rates to make sure that people could survive and go to work and so forth.
Yep.
Now that COVID is gone from a practical point of view, everybody wants stuff. I want a TV. I want to go out. I want to do all these things. And so the more people apply, okay? And what's happened is that things have gotten so expensive that the Fed is like, these interest rates can't continue like this. We're going to have to increase them. So all of these growth companies that have enjoyed low interest rates are getting hammered, okay?
Yes, I was on there. I was watching CNBC, and a lot of people were slamming Kathy Wood because she kept buying Zoom, and Zoom has erased all of its market share that it gained over COVID. All of it.
Right. Yeah.
And
it's worse than when it started.
Yes,
right?
it's worse than when it started. And Zoom was probably the poster child of the pandemic because
Yeah.
people got Zoom fatigue, and that's the way you work now is everybody's on Zoom and everybody's working from home. So imagine a company, let's say they went up, $50 billion. I don't know the exact number, but now
Mhm.
that whole $50 billion has been erased. So people made money with that 50 billion and people lost money with that 50 billion. And like you were explaining, the reason it went up so fast is because people could borrow money so fast to upgrade their businesses, to upgrade their homes, to buy things on credit. Right? I have a client I was just on the phone with, and this guy bought a truck. He was in trucking. He bought a truck and he overpaid for it because he can borrow very
Yeah.
low. So
Yeah.
his interest rate is probably like 3% on the truck, and he
Mhm.
paid like $20,000 more. Now on
Yeah.
the flip side, a year later, gas prices and fuel prices and diesel prices are up so high, and the brokers are not compensating them for that. So now he got a high truck payment because he overpaid, a high fuel payment, and is squeezing all of his profits. And now he's trying to sell his truck, but now the trucks then went back down. So
Exactly.
don't
That's what I
nobody
said.
want.
Well,
So
and that's the important part, right? What's happened is that when you decrease your I'm sorry, when you decrease your interest rates, it's created what you call an asset bubble, right? All these goods, cars, houses, you know, that were valued at so much, they're not valued so much anymore. Same thing for individual stocks. They're not worth as much money. And so depending on, again, when you put your money into the market, you're going to see different types of returns because of that. So the things that work in a low interest rate economy, right, the types of stocks that you buy are not necessarily the same things that work in a and by the way, this is not even a high. I mean, inflation is high, but generally speaking, interest rates relative to history, they're still not all that high. It's just that they went
right,
up super fast. But they're completely different sets of stocks. The other thing that you learn through history is that there are certain leaders in a certain time, right? Apple leading through this, time for whatever, right? And if you want to even go back further, there was a time where tobacco was a leading one. At the end of every cycle, there's typically new leadership for the highest performing stocks because things change. Healthcare, not healthcare, but the economy changes. So I'm going to go exactly back to your example. If you know the interest rates are high, and interest rates are tied to commodity prices like oil and gas, like you just talking about, gas prices are up through the roof. Well, guess what? I told you this. It's, before the interest rates were really going up, and we had one of our conversations. You're like, hey, what are you gonna do? It's like, I'm gonna buy some oil companies because you know with interest rates, like, dude, they're going up. You can do very well with energy, natural gas prices. Check this winter, by the way, guys. Go out and I'm going to say this, ahead of time. Natural gas stocks. That's going to be one of the, we're supposed to give them 5 sectors or categories. Just remember that one,
yeah,
right? But you know, energy in general is the hedge for high inflation. Okay, so if you look at the cost or the multiple, okay, like how much money you got to spend for a certain category of companies. Energy companies have been really, really inexpensive for a very long time. Between fracking, right? The U.S. now makes its own energy. The Teslas of the world, the solar powers of the world. Everybody thought, oh, we're just going to get rid of oil. We're going to get rid of oil, and it's going to be done. But due to supply chain issues, due to inflation, the cost of oil goes up. And so when you are building your portfolio, understand that, like, if oil goes high, growth stocks are going to go down. If the price of oil starts to loosen up, you have this yin yang between kind of growth and commodities, right? And so, understanding, if any of you all believe that interest rates are going to remain high. Now, there have been certain things that have come up lately that show, oh, interest rates have slowed down. Well, just because interest rates, I'm sorry, just because that there are certain items that have shown that inflation has slowed down, right?
yes,
And people are cheering that. So if you've been in the market over the past month, what's happened to your portfolio? It's gone up because it's been party time, right? Everybody's like, oh, wow, we have reached peak inflation. So that means the Fed is going to stop throwing all these high interest rates at us, right? But people don't understand that just because we've reached peak inflation doesn't mean that we're not going to have inflation. I mean, it's
Right.
still going to be there. And so you have to have, and to be honest with you guys, this is like, this is like the 80s and the 90s, like what we've been living through, I'd say for the past 10 years has been highly unusual. So welcome to what, your parents and grandparents have been dealing with. Like this is a much more normal situation, right? And so what's happened is that, the Reddit crowd, the Robinhood crowd, who have really seen a certain way of doing things and made money. Oh yeah, you made money off of it. Have now got to, you can't personalize it. You know what I mean? And think to yourself, that the same thing is going to, work. You just have got to like understand it's a new world. So that's why inflation has wreaked havoc on your 401k, on your personal brokerage accounts, all those things, because they absolutely, if you think inflation is going to go higher, well, then you got to invest in a certain type of thing. And you also have to pay attention now to the Fed. James, when's the last time, like, I can't remember. Now, we talk about a lot of things, but you're not like, yeah, I want to listen to what the Fed has got to say. You know what I mean? Because
Yeah.
you're much more into the individual company. And you
Yeah.
have assessed, this is their profit and liability. This is their growth rate. This is their EBITDA. Like that's how you are. But now you see, it's like, it's not about them. It's about
Yeah.
things that are totally outside of their control. And don't fight the Fed. It's the best investment advice you're going to get. Do not fight the Fed. If the Fed is saying that they're going to raise interest rates, don't rationalize away from it. Don't say, well, I'm going to outsmart it just don't fight them. Just take the easy money. The easy money will help you to go there. Put everything aside.
All right. Now, I know you have a individual portfolio and you
Mhm.
have advisors that you work with. What are some things that um your advisors are telling you or informing you on in terms of the markets that you may disagree with or that you are doing differently on your
Okay.
personal investment philosophy? So is there a disconnect there?
What a great question, right? Yes, there is. so when you guys get an advisor, um, they have a fiduciary duty to lead you in a certain direction in a very stable, kind of almost risk adverse way, right?
Yes.
They want to make you money as an investor in the long run, right? But when you've done this a while, you're not just an investor, but you're a trader, right? So I'll go in, I kind of look at stuff, you know, not every day, but every couple of days, and are I'm not afraid to sell things and take some tax gains and so forth. So they are looking at things from the, hey, Savoy, when you hit 50, this is what I want. Hey, Savoy, when you hit 60, this is where we want you to be. And so their tactics that they are using to get there are not like, it's obvious to me that interest rates are going to be where they are. Um, I will have I probably have around 12% energy stocks in my portfolio. Again, much higher than the average S&P of like, I don't know, 4 or 5%, right? So I have three
Right.
times the amount of what my advisor would tell me to do. But I'm not going to like sit around here and wait for that to happen. But again, for me, I have a healthy respect of, you know, this guy's been in charge of Southern California for Bank of America forever, and he's 70 years old, so he's seen some things that I haven't seen. So again, I'm diversifying, and I'm saying I'm going to give you this amount of money. I'm going to let you do with what you want, and this is my amount of money that I think that I can do what I want, but I'm not going
Uh,
to do anything crazy. But
Let me
energy,
ask you about. No, go ahead. Go ahead. Finish. I got
no,
another
no, I'm saying,
follow up.
but if you're asking about like the different pieces of that, they would invest in very stable, the other big thing about inflation, and this is something for everyone to remember, is that you look for companies that don't need to borrow, right? So if you're making money, if you're sitting on a pile of cash, you're not going to have to take out those loans to grow your company, right? And that's the difference between an Apple who is a growth company, but they're sitting on tons and tons and tons of cash. Well, they're not going to take any loans from anybody, so it doesn't affect their ability to grow as much as other people. And so,
Right.
for me, um, I'm looking more towards some growthier things as well. I actually have a barbell approach where I still like growth, but I'm also not ignoring some other things. But those are the real differences. They're very extremely boring.
Are you familiar with the government I bonds that the government are
Yeah,
issuing in order to as sort of a hedge against inflation? You only could put up to $10,000 in there, but is
yeah,
that
those are
something
bad
you would
ideas.
yeah, is that something you well, I'm not recommend, but is that something people
Yeah.
with that amount of money should consider instead
All
of
about
putting
your
it in the market versus putting it in the market?
Yeah. So with those I bonds, the thing that people have got to realize is that money becomes illiquid, right? So it's like putting it into a CD or something like that where you can't touch it for a year. Okay.
Hmm.
Um, $10,000 is a lot of money to not be able to touch in a year for whatever reason, right? So
Yeah.
if you're risk adverse and if it's your only $10,000, number one, make sure that you have enough in savings, right? That if something happens to your job, employment, whatever, don't put it in if you haven't saved enough money, right? Whenever you do anything that gets shuttled off into a place, it's like private equity. If I invest in a private equity project, I don't see that money for 5 or 6 years. It's like it's gone. So I better be able to live with that. So as a young person, I think that most young people don't have the luxury of an illiquid asset. In other words, um, and I don't think that most young people can put something in a place and not be able to get it back if they need it, right? I know that I wasn't, right? So
Right.
putting money into the stock market makes more sense only because if life changes in any way, I can still get it. But I actually think it works better if you have some money. Okay, if you want to park it someplace, that's when you want to do it, right? But that, like I said, 10,000 is not a small sum of money. Now you can put in 5,000 or you can put in 2,000. You could choose the amount that you put in there, but it's a very reasonable consideration for sure.
Now, what do you think about what's your thoughts on the Biden administration kind of changing the definition of what a recession is?
Ah,
Because currently by the definition we are in a recession, but
right.
the language of the administration currently, and
Yeah.
this is not politically motivated. I'm just saying, just in
Yeah.
general, the language of this administration is that we are not really in a recession. So, what's your thoughts
Right.
on that?
So the reason why, let's see, okay, great, and James killing it today, boy. He's like, yo, like he read some papers, like so. The reason why this is important, okay, is that a recession historically is 2 quarters of of reversal of your gross domestic product of your GDP. When you're from January to March is a quarter, from April to July is a quarter, right? So the whole year is divided into quarters. So if you have two sequential quarters of contraction of the total economy in your country, you're in a recession. The reason why a recession matters to stock investors are that when your economy shrinks, less people are using goods. Okay, so um, I always talk about banks. Okay, because we're going back to old school. A bank, think about it. If the interest rates are going higher, banks make money, right? So
Right.
the interest rate's going to 6% from 3%. If you're buying a house, we lose, but Wells Fargo wins. They're making more money. But if you raise interest rates to an extent where you induce a recession, that means people aren't going to be using banks at all because they don't have the money to go and do so anymore. And then that will
Right.
actually hurt banks. So the reason why Biden wanted to go and switch up the definition of all this is that he didn't want to spook the economy. Part of it's politics, but part of it is if you go around telling people that you are in a recession, history will tell you that that becomes a self-fulfilling prophecy, right? There are certain stocks that
Yes.
are growth stocks, certain stocks that are value stocks. Then there are certain stocks that are momentum stocks, right? That momentum swings both ways. Momentum is great, that people want to, you think that everything's great, but you can have a tremendous, downturn of
Let me give
momentum.
you. Let me try to give you an example of a momentum stock. A company like AMC,
Yeah, I was
right?
going to say
So
me. Yeah, 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 yeah,
yeah,
yeah. There's a whole thing.
A company like AMC, right? When COVID hit, the momentum shifted to the point where people said movie theaters are done. Like I never go to a movie theater again. So they were getting killed until the meme stuff happened, right? And now, when the economy opened back up and COVID was tightening up, the vaccine has rolled out.
Mhm.
Now people are like, well, actually, I want to go to the movies more. So now
Oh, sure.
the stock starts shooting up because people start thinking like, well, actually, I want to get out more. And if the reopening trade is going to be into one of these stocks like AMC.
Sure.
So it really rides the wave. It ain't People are not trading based on the fundamentals and the cash position and all. They're
Right.
trading based on the momentum of the market and the language of the economy, not necessarily the numbers, right?
And James, let me ask you that: who are the what is the most impulsive age group? Right? It's like, again, young people, right? So when you look at the meme, the Bed Bath and Beyond, how it just zoomed up 50%, trimmed that, and the AMC, all of those are, it's almost like gambling, right? You're going to bet on them, and I mean, those are the extreme examples. There are other examples where, like, you could have like oil, where kind of like everybody knows that it's getting higher, and so it creates this momentum to where that they can be overvalued, or like you said, reasonable companies are undervalued because everyone thinks it's the end of the world. So the Biden administration, by saying we're in a recession, not just a bear market, but we're in a recession, means that Main Street, your customers are going to stop coming. If you're an
Yeah,
investor, take your money out the bank. People don't like that. And
yeah,
but the thing is also, it I agree with him in that not all recessions are the same, right? When you see the type of growth outside of COVID, that is it's you open things back up, of course it's going to go back down because everybody's got. I just went to the French Riviera, you know what I mean? I went to Europe. I did all this stuff because I was stuck in the house for 2 years. So I
right.
just went out, right? But that's not going to continue. That was just what everybody just wants to get up and go out, but that's not going to be in perpetuity. So he's trying to keep these things contained. And I think as an investor, for being a young investor, you shouldn't get too excited about, a lot of this stuff. You should just be very patient and understand that this is all very normal.
Yeah, I mean, but I think a lot of people, especially young people, I get a lot of DMs every day talking about, what do you think about this stock? It went up 15%. What do you think about this stock? And
Sure.
one of my team members, he does a lot of option trading and stuff like that. He's young, so it's good that he's in the market, right? At least he's
Right.
learning, putting his money to learning that making money at work and making money with his money is a good thing, right?
Oh,
And
sure.
he had come to me and say, this stock's up 20%, and it's really like the fear of missing out. So
FOMO.
what do you
Real.
yeah, so what do
Yeah.
you say to investors on that? Because no matter
Okay.
who you are, it's an emotional thing that humans have. If everybody's going this way, you probably want to go that way because that's the human nature in you. So
Well, you are a Buffett disciple. And so that, be fearful when others are greedy and be greedy when others are fearful, right? You have to understand that just because stocks go up, especially as a young person, I can guarantee you that you're going to make more money the rest of your life, right? And acting like this is the end for you, acting like you're not going to make any more money, that you're ultimately going to want to invest, is being short-sighted. If I'm a young person, I would want bear markets all the time, right? Because eventually you know that they're going to get out of them, right? But you need to look at them as opportunities to invest long term. When, again, if you got a stable job and everything, just put it in there. Don't look at it every day. At the same time, if you're a trader, you could say to yourself, well, in the past month, stock market's gone up 13%. But again, understanding history, understanding that September and October are typically really bad months for the stock market, right? Just because it's gone up 13%, don't invest today thinking that, I'm fearful that I'm going to miss out on this going up straight up until the end of the year. Stock market never goes straight up. It goes up and down, and it can go in a trend, but it's not a straight line. And so, I would tell people just in general, I believe, I don't have a magic wand, but history will tell you that, September and October haven't been that great historically. I wouldn't go chasing a bunch of stocks right now, thinking, well, they're still 10% off the lows or 15% off the lows, because I understand that interest rates have, like that car, it's made that asset less valuable because it's not earning necessarily as much. And then just understand that, like, there are probably going to be some pretty good opportunities historically in the near future where, at the end of the year, we could possibly even be higher than we are right now. I mean, it could really, surprise a lot of people, but it's never the end of the world. It's not like you're going to miss out, and understand that you have plenty of opportunity to continue to put it in.
Now, let me ask you this, right? Let's talk about alternative investments. So the young lady just asked about investing in crypto. So
Mhm.
I read an article. I forgot. I think it was, I believe it was the Wall Street Journal, but don't
Mhm.
quote me on that. But you can pretty much Google it, what I'm talking about. But it basically said around 35 to 40% of cryptocurrency holders are African Americans. And half of those people, it was their first time investing, meaning they just opened up the Square account. They just opened up the Cash App account, and that was their first asset class that they actually owned. Now, crypto was up all the way almost to 70, and people thought it was going to the moon. Crypto to the moon, right? And now it's down to the 19, 20, 21, 22,
Yeah.
hovering around the $20,000 mark.
Mhm.
So a lot of people are in the
Mhm.
red. So
Oh yeah.
what percentage of alternative investments do you have in your portfolio in terms of some of the more risky things that you do?
Right. So I'm one of those people that's in the red, but I never put a lot of money into crypto, right? So put some money into Ethereum. I thought of it total as play money, and I never really considered it a investment that I was going to bet the house on. You know what I mean? But let me tell you, man, I met so many people that were early on they killed it. They were like, we're gonna go, but like so many things, there's timing of these kind of speculative investments, right? Now, I have, by definition, alternative investments can mean commodities like gold, right? Gold has traditionally been a hedge for inflation. I think gold is actually going to do really well, right? If you think that the economy is coming back and people are making things, copper, zinc, minerals. Okay, so let's go into the second thing that I think are going to be right. I already told everybody in a high interest economy, oil, natural gas stocks do well. Second thing that does really well, commodities, 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 commodities. Those things which you need to build things and hard assets that tend to go up, right? So that as a alternative investment is appropriate right now, right? If you think that those things are going to happen, that's not a bad book of business to go into. But also there's private equity, venture capitalists, opportunities where those are technically alternative investments, I'll tell you, I thought they were really sexy when I was doing them, and I made some money off of them. I still say the stock market is a much more transparent way to make money. You know what I mean? When you put your money into private equity and those kind of things, it's like you give it to a banker and you just don't see it, and you get some reports. But if you know, to once those private equity investments become public, you really get to see a lot more of it. So yes, I would say out of my portfolio, I would say um, maybe 10% or so is alternative investments, I would say. But 90%, I would say, of net worth, I would probably say, you know, 15% real estate. I would say 10 or 15% alternative investments. Um, and then, I would say at least, I would say 70% of it, 65, 70% of it is probably just, the market and in different iterations of the market.
Now let me ask you this, more of on a personal wealth journey question. Um, when you started your wealth journey, obviously you're making money as a physician. Did you start making money entrepreneurial first and then invest it, or did you invest first and then start different type of businesses? For example, so did you use your money you made as a doctor to invest in stocks, or did you invest into start a business and then use that money to start? And I think that's a real important question, because a lot of people have jobs or they have a business and they're trying to figure out, do I keep reinvesting in my business, or do I diversify into some form of real estate, or do I put that
Mhm.
in some stocks or bonds? Do I
Right.
put that in some crypto? You get the question I'm asking?
No, I totally get it. By the way, I don't have any bonds except for what my financial advisor has put in there. So, let me be clear on that, right? So, like bonds is like, yeah, I'm not a bond guy. Although I tell you, every single time, the first thing that I look at is the 10-year, treasury note and the bond. Like I want to understand them, but for me personally, I'm not that guy. Um, when my on my personal journey, physicians make a reasonable amount of money, and so I invested into equities because it's easier, right? So in my journey, you just went to school. They didn't tell you again. They don't talk about money to doctors, right? And so the only thing that you can do is invest in the market because you really have no skill set or no mentality to be entrepreneurial because it's almost like they sucked it out of you out of school, right?
Yeah.
Now I think that for me, it was always something that I had thought about. I would probably say that anybody who's watching this now is somewhat entrepreneurial, right? So we have a selection bias of a group of people who are all kind of thinking the same thing.
Right.
So I would say that um, the the easiest thing for you to do again is to diversify. And if you're just starting out, put it in the market. And I would say put it in the market just because it's not illiquid, right? You can take your money out of the market whenever you feel like it. Now you may have to pay fees. It may be less than what you put into it, but you can always get it. You know what I mean?
Right.
Once you start your own business, I think that the most rewarding professional thing you can do is to own your own business. It is how Black people have ascended from the middle class, from poverty into the middle class, and from the middle class to the upper middle class. There is no substitute in life. And I'll give you an example. It's like I'm on the board and vice president of a $1 billion healthcare company. My small businesses that I own maybe triple my salary. You know what I mean? And so understanding that like the real owners of your business, eventually it all pays off. And for any of you all who may not know, just 3 years ago, I was like, dude, you got something here. You got to keep on, building your business. And it's really, you are absolutely, the epitome of what I'm talking about. It's like, you balance and you're putting some in the market, you're putting some into your business, and you found a way forward where now you've branded this and it's created this wonderful opportunity for yourself. And I think that you are a great blueprint to it's not even about me. You know what I mean? Like, look at you, like you're a great blueprint for, I think, a lot of the people who are looking right now. But it's very important to give up your employee mentality. You may have a great job. I got a great job, no doubt about it. But even at my healthcare company, I'm a partner, I'm an owner of my 9 to 5. Finding opportunities to do that, and then investing in your business knowing that you will lose money. 99% of the time you're going to lose money, but as long as you have learned from those mistakes, I guarantee you that the next company that you try to build, you're going to do better, and you're going to do better and better and better until eventually you come up with the right solution. I think it's good for your soul, it's good for your intellect, but financially it pays off. So again, it's something that to build your own business may take, to build your own successful business, and then this is when you shouldn't look at, James, right? It may take longer than 2 years to go and build something that's really big, right? For me, um, um, I built this Hollywood production company where we do all of Kevin Hart stuff, and we do all a bunch of HBO and Netflix COVID stuff, right? But that has taken 15 years for me to understand business, for me to understand a lot of other failures of little companies that didn't really work, for me to generate one company, and but that's the one that worked. That one made 10 million. You know what I mean? And you're like, yo, where did that come from, right? But but I look at all of the other. I don't look at the other things that I did as failures. I look at them as investments into myself. So, you don't want to bet the farm on with hubris. Get a mentor, and I've already, to all of you guys who are there, just DM me. I James knows I talk to everybody, because at some point, this becomes legacy building, right? It's like, I'm doing
Yeah.
fine, guys. I don't want any. So many times people are like, yeah, thanks for the advice. Do you want some? It's like, dude, I don't want any of your stuff, dude. I'm just trying to give you advice so that you can go and change the world. Get a mentor, understand your business plan, understand what you need to do for your business plan, and make sure you surround yourself with people who are older than you. When I say older, I mean not even you and me older. Like, dude, my mentors are like 70. You know what I mean? And they're sitting around smoking cigars, and I like. But having people who are like that have been through that, extremely important, because then you don't make the same mistakes that they have. But owning a business, investing in your own business, extremely important for your long-term financial future. There's no substitute for that.
Yeah, I rarely talk about myself, but you kind of put me on the spot, so I'm gonna kind of give people a journey on,
Yeah, you should.
where
Yeah.
I got to, where I'm at now. So, for one, I'm from the east side of Detroit. I was raised by my grandmother because I lost my mom at 4 years old to gun violence. My dad was in jail. So I ended up in a foster home for 2 years, in and out. And then my grandmother, by the grace of God, was able to adopt me, put me in school. She put me in the first grade, and that was the last time she put me in school. I put myself in middle school. I stole my social security number, stole my social security card, forged some documents, put myself in middle school. I forged some documents, stole my social security, all of that, put myself in high school. Did the same thing for college. And then when it came to college, um, I qualified for the Pell Grant, but I didn't have a scholarship because I didn't take the ACT serious. So here I am having to pay for school, but I had a 3.5 GPA coming out of school, which is crazy, right? I should have got at
Mhm.
least a part time,
Yeah.
a partial scholarship, but I made the mistake, so I had to take out student loans. My parents didn't make enough money to do it, so they put all the loans on me. So I started with about $55,000 in student loan debt. I was a mortgage banker, so I worked at Quicken Loans, and I was making really, really good money. But the problem is, I went on this contest. It was called March Madness, and basically they work us for 30 days straight in the mortgage industry. And I was the youngest guy. I lost. I was number 6 out of the top 5. The top 5 get paid vacations,
Woo!
$20,000 bonus. Man, they got it. They got it all. Man, they got their salary.
Oh
They
yeah.
got they got to bring their spouses on vacation. They got everything. And here I am. Um, I was the youngest guy at that time. I was 24, so I was the youngest guy, or the youngest person in the top like 30. right? That even scratched the surface, that even qualified for it. So what happened is basically my vice president tapped me on the shoulder and said, "Hey, I want I want to take you to the Cavaliers game. I saw you putting in your effort or whatever." And I worked at Quicken Loans. Quicken Loans owns the Cavaliers, right? The Cleveland Cavaliers is owned by Dan Gilbert, who owns Quicken Loans, which is now Rocket Mortgage. So I'm like, all right, and I'm from the east side of Detroit, so I'm so crazy. I'm thinking we're gonna drive. I'm like, all right, we about to just drive 4 hours up the road. And they're like, no, we're not driving. I'm like, so how we getting there? And it didn't click to me that we was taking a private jet,
Yeah.
right? So I'm like, wow, people really, really
They
live
really
like
do.
this.
Yeah.
And it was a big culture shock because 24 hours ago, I was at my grandmother's house, and then somebody started shooting around the corner, and I had to just get in my car and just drive off. And I'm like, oh my God, right? So 24 hours later, I'm on a private jet. The lady is literally feeding me grapes. Like, y'all probably think I'm lying, but the lady literally she was, she literally was feeding people grapes because she was like, everybody on there was new other than the billionaires who owned the plane,
Right.
right? Everybody never been on there. It was all employees except them. So it really, really shocked me, and I couldn't unsee that because I knew it was other people out here who bet on themselves, who were living a certain lifestyle, and I couldn't unsee that. It's kind of like you go through your girl phone. If you go through your spouse phone and you see her texting her ex, you can't unsee that, right? You can't unsee that. You like,
Bro,
you ain't you ain't
are.
gonna not you're not gonna not say
Oh, that's
something,
funny.
right? It's gonna eat you
Yeah.
alive. So
Yeah.
that was
Yeah.
one of those things. It was really eating me alive. So I saved about $30,000, $40,000, and I quit my job. I probably shouldn't have did that, but I quit my job, and like 3 months after being on that plane, I saved money. I moved in with my sister for 2 weeks, and then I moved down to Atlanta and bet on myself. I'm like, I'm gonna start this media company, right? So I started a media company, and I'm also trying to pay on student loans. I pay off $10,000 worth of student loans. I got about $30,000 left, and I lost all my money. I fell flat on my face. I went broke. I had about $4,000 left. I was embarrassed. My family was asking me, are you sure you want to come home? I called my old job back and begged for my job. Literally, they did not give it to me. So if they would have gave me that job, I wouldn't be here
Who
today doing
knows?
what I'm
Right,
doing.
right. Exactly. Exactly. Who knows? Right.
And then I start learning the social media game, start marketing, and I start getting mentors, and I built a brand. I called the company, then I named the company. I had a company called Millennial Mistakes. I lost a bunch of money, and I switched it over to Black Millionaires. I had a partner, and my partner left like 3 days in. We got into an argument. It was my best friend, and it really hurt my feelings. So I'm really here because I just really didn't give up, and I'm like, man, at the end of the day, I have nothing to lose. I already invested my money. And the only reason I didn't quit is because I put $150 into GoDaddy, email marketing, and all this other stuff, and I couldn't get the money back. Because I tried, I called my bank and they said no. Um, so I just started really using the skills I learned by losing the $40,000 to start marketing and telling stories about Black millionaires. Then I met you. Um, you start educating me on a lot of things. And I just kept meeting good people because of
Yeah.
my brand, and I was all talking all about positivity. And then the pandemic happened. And then at this point, I had a job. And at this point, well, I had a job before so I quit my job again to do what I'm doing, to doing
Yeah.
the Black
Yeah.
Millionaires. And then the pandemic happened. And I'm like, oh my God, I'm probably got to go back and get a job because nobody's working now. So I was trying to get jobs then, and it didn't work. So I just really said, I'm gonna bet on myself. I'm gonna put everything I got into building this media company. I'm built for it. I can do it. And here we are today. I got a bunch of people who've helped me out. I've helped a lot of people. I connected with people. I did tours across the world. I got the Black Millionaires conference that I'm doing, my first conference,
Yeah.
February 3rd through the 5th, 2023. So I got a lot going on, man, but I'm really here by grace, mentors, and investing.
And
Um,
but just listen to what you just said. Like, you again epitomize everything there is about being entrepreneurial. You started a company like Millennial Mistakes, figured it out, started another company. When you lost money before, you figured it out. Like it's not the what I want the listeners to understand is it's not the losing money that's the issue. It's like, what did you learn? What are the skills that you learn? And it may be a heavy price that you have to pay to learn,
Yeah.
but did you learn something that you're able to apply it to be, to have a company like yours? And this guy, just so you know, he's a humble guy. This guy, when he does shows in LA, best believe calls me up, we go to dinner, and he's still asking questions like, okay, so how are we gonna go to the next stage of my professional development? So if you're also a testament to having mentors, and knowing how to utilize the resources, and because nobody's gonna come to you. It's like, dude, you're gonna call
Yeah.
them up. You better.
Yeah, I mean, I asked you a question. Where I was like, you was like, "What's your next step?" I said, "I want to start doing a bunch of big conferences."
For
You're
sure.
like,
Yeah,
"You a
yeah,
for profit or a non-profit?" I'm like, I'm a for profit. I'm making money.
yeah,
I pay my,
yeah.
I pay myself." And the crazy thing, I don't even know if like, you didn't even know if I was full time or not. Like, you're like, what? So what are you doing outside of this? I'm like, bruh, I've
No,
been
I
doing
don't.
this, right?
No idea.
Right? Because
Yeah,
we don't really talk about, like, a lot of people think like, mentorship is really about talking about money, how much money you make, and hey, invest in this. No, it's really about the mindset and just getting me, pointing me into the right direction. So you challenge me like, hey man, you need to start a nonprofit. Right.
That's exactly what it's like. Yeah, make sure your board is right. Make
Yep.
sure you understand the ownership. Like, because again, these are all things that, like, dude, when you've done it, these are all from an entrepreneurial perspective. The things that will ultimately make you successful. So again, I'm telling everybody, you know, James has done it on steroids, and but anybody, you guys have questions, smaller or larger, just hit me up or hit up somebody who you think is really going to give you the best advice, because there are a lot of people who don't necessarily walk the walk, right? And
hmm
you gotta the best advice you can get are from people who don't want anything from you.
How
Like,
how are we doing on time? I know we've been on here about an hour and some change. How we doing on time?
oh, we're good. We're good. I just want to make sure that we have addressed for everyone. I think that again the stock, my general stock suggestions, right? Because I know people, they're always into that kind of stuff. I think it's more of making sure that you're balanced in making sure that um, however way this ends up turning, whether we go to a recession, whether there's higher inflation, you don't bet the farm on any one thing, right? So I told people, I think that um, a simple company like ExxonMobil, you know what I mean, or Pioneer that does natural gas, that's your energy. Those are my energy picks, right?
So we're going over the top five, your top five
Yeah,
picks.
yeah. I just want to, I just want to make sure that everyone knows that, like, those are some of the my mentality in our discussion. The ones that I've discussed already are like, make sure that you have your gas and oil, you know, give me 1 second. Make sure you have your gas and oil companies kind of in line, right?
Mhm.
Because inflation isn't going anywhere. You're going to make money off of them. Just even if we enter a recession and people use their vehicles less often, I think that the price of oil is going to go up. It's a great hedge for other things. So I think that is one of the more important investments. And then
Let me hold on before we get to before. I don't mean to cut you off, but I have to ask.
that's all good.
What's your thoughts on people saying, yeah, Biden canceled the student loans, but we're just going to pay for it through inflation? Is there any validity to that?
I don't understand that. So um,
S-
so I understand that. So what I understand is, so presidents get too much credit for, like, the economy, right? I think that the reason why there's high inflation is more so a health choice. So the health choice that this company, that the country made, is we're going to shut everything down. And the second health choice that they made was we're then going to open everything up, just like this. So, but if you shut everything down for 2 years, what happens, right? What happened to the airline industry? all the pilots, if you remember during COVID, they're like, we don't need our pilots, we don't need your stewardesses. These, American Airlines, Delta, they were giving packages to pilots to
Buying them out.
retire, to buy. They bought them out, right? They're like, oh, it's the end of the world. This is what we're gonna do. Cruise lines, same thing. Um, you can even look at restaurants. Think about all the restaurants they're closed. All the people who were helping, the servers, the chefs, they all lost everything, their jobs, And then all of a sudden, they're like, okay, so we're going to open back up now, everybody. Well, who's working there, right? There's a reason why if you've taken a flight and your flight's delayed, right? There's no one to work. There are no air traffic controllers. They literally gave them severance packages so that they're not working. So there's a reason why it takes forever for you to get your food when you go to try to eat in now. There's a reason why all of these delays. And so, inflation now occurs because, well, we're going to have to start paying people more, right? We're going to have to start paying pilots more. We're going to have to start paying servers more. All of these people, it's created an increase in cost just to do the things that you were going to do. And then the second thing is you're dealing with China. It's not like the whole world said we're going to open back up, right? It's just us. And then you have China who said, if you have one case of COVID, we're just shutting down an entire city, right? And so now all of these components that we use for computers, for cars, for whatever, you've got one part of the world who's opened back up and wants these services and wants to pay for these services. And then you got another part of the world, actually the part of the world that makes a lot of this stuff is shut down. So their warehouses are dried up. Their factories, people are going in, right? There's what you call a supply chain problem where you got a whole bunch of demand and very little supply. All that does is it's making inflation crazy. So the Biden administration this was the world did not coordinate this response at all. This is a typical black swan event, but the Biden administration doesn't really have any influence on this because it's so multifactorial that the real consequences for health decisions are still continuing to be felt, right? And inflation is the largest one. I mean, but the good news is people making more money, right? A lot of people got raises. Unfortunately, that's bad for inflation, but a lot of people are making more money. A lot of black and brown people who are part of this service economy, they're getting more cash, So I think that if we're going to, when you say that, we're going to pay for it, I think that most people, if I was going to get a $10,000, if I could get my $10,000 taken away from, right, it would take a lot of money for me to make $10,000 off of interest. You understand what I'm saying? So,
right.
I think especially for most people, most millennials, early Gen Zers, no, you're getting a good deal. You know what I mean? Now for everybody else, right? The Gen Xers, yeah, we're paying for it. You know what I mean? Because we've already put in, 10 years of student loans and whatever, you know what I mean? So I think that overall, the political stance of this, Biden is connecting with younger generation people. And it's not like, there are some people in the Democratic Party that said, oh, just wipe away all your student loans,
Yeah.
He decided that, the 10 and the 20,000. And again, those Pell Grants disproportionately help black and brown people. You know what I mean?
Yeah, so, no, that's one thing that I mean, people say what they want about politics or whatever. But that was one thing that I really, really did agree with, and I really liked that the Pell Grant doubled.
Totally
that helped out so many people, man, because a lot of people won't admit it, bro, but that a lot of people.
But let me tell you something. It reminds me of what Obama did with Obamacare, right? So, you basically put a lot of people on Medicaid, a lot of black people on Medicaid, and a lot of people will be like, well, you know what, Obama, what did you do with black people? And to a lot of critics, points, it's not like he was explicit about it. You know what I mean? There are certain policies that will, more so help our communities and others. And, the Medicaid thing, especially for poverty and people, getting access to care was huge. Let me tell you, for black, young professionals getting out there, let me tell you, this was huge. This is going to be, in retrospect, probably one of the more endearing things a president has done for. And again, this is one of the things that he can control. Okay, he's like can't, and I don't even know what the Supreme Court is going to say. By the way, if any of this is even legal, okay, but I don't know if it's legal or not. But if he's able to pull it off, yeah, that Pell Grant thing, man, that's it, bro. When I was growing up, and I went to public school all my life, and I went to Howard and HBCU, and I'm like, look, dude, Pell Grants were like how you got through the door. You know what I mean? And I'm like, that definitely. I mean, I got a lot of criticisms for him for things that he's done, you know what I mean? But I'm like, this particular thing, it's great for black people, dude. It just is,
And
so,
I think everybody's pointing at the, like I got a best friend, she has $200,000 in student loans, but she went to law school. So I think people are pointing at that and saying, well, it's not helping her. But the reality is the average individual, and she's good because she came out the gate making six figures. So she'll
right.
be all right, right?
Yeah, I'm like, but that's not who it's intended for. You know what I mean?
Exactly. The average individual only probably have about $30,000 to $35,000 in student loans. That's just based on the averages,
that's
right? So if you come out and you making $40,000 to $45,000 in your career, that $20,000 just really increased your net worth.
Huge.
And now you can actually go out and buy a home or do some of those things that you can go out and acquire these assets, because as a mortgage banker, as a former mortgage banker, that's one of the things that canceled out a lot of black and brown people is those student loans that scar on your credit report, those student loans. And we legally have to take 1% of your overall balance and use it as a monthly payment. So if you had $100,000 in student loans, that's $1,000 monthly payment, which disqualifies you. That's a mortgage, right, in itself.
Well, let me tell you something. Like, again, if you're young, again, this works for young people. Why? Because older people usually get out of that. Professional people get out of that eventually. But I'm like, dude, for young people, I don't care where you are. For young people, this is extremely important. You know what I mean? Like your ability. I mean, if I had 10,000, look, I've already told you, right? I put in 30 grand, and 15 years later, it's $140,000. So even if, let's say you put in 10 grand, in 15 years, that's, let's just say that's $60,000. Like the multiplying effect of even just putting that money to you. Now, if you go out, you want to go and go to some concerts, and I'm like I can't help you on that, right? But if you're going to like you say, we are assuming people. I mean, and that's the thing, people got to get educated, right? Because some of these people are gonna be like, oh, this is the new Versace belt or whatever. It's like, dude, invest in yourself, invest in your business. That's how you do it. You just got 10 grand where you can go and get a loan, go get a house. You know what I mean? Have that be part of your down payment. That there's all kinds of stuff. I think it's huge. So like I said, I criticize Biden enough, but I'm like, this was a really good look for young black people. Oh, for sure. Like, no doubt.
No, I think it was for sure a real good move. Now in terms of spending, right?
Mm-hmm.
The $10,000 that's coming off of your, or the $20,000 that's coming off of your student loans, in which we haven't paid in the last 2.5 years.
Mm-hmm.
How is it going to affect people a bit? Like, I don't think people are going to feel
Yeah.
they're not gonna feel it because you ain't been feeling it the last 2.5 years, but you are gonna feel that monthly payment that has to start December 31st.
Yeah.
And a lot of people, They looked over that. They just looked at the $20,000 and the $10,000 number. They didn't look that they slid in that you're going to actually have to start paying those student loans back, no matter if we cancel some or not. So, how do you think that's going to affect the consumer spending? Because we already are getting these bad numbers from Walmarts, the Targets of the
Yeah.
world.
So I'm not in. None of my like picks are in. Well, kind of. They're not really in consumer discretionary, right? Because
Okay.
I think that there could be a recession, right? And so I get it. I understand how it could be, but it's not a pure like let's invest in Nike. Like even like a high end like Williams and Sonoma type thing.
Hmm.
None of my picks are like that. There's some peripheral ones, kind of around that. I'll give up my third little thing, right? I think a company that's in a great position is Amazon. Okay, and I think that they have money to spend. I think that they had diverted a lot of their finances towards COVID related costs, which have gone drastically down. And this is a more of a nuts and bolts, you know, item where the cost of Amazon has gone down, more drastically than the other FANG big tech stocks. Where Amazon's not a bad long term investment in your life. I use it almost every day for something or another, right? And I think that its ROI will remain high, even though it's a higher valuation, right? You talk about growth stocks. Amazon doesn't need to go to the bank for anything, right? Like it's
Right.
another one of those companies that's sitting on cash. But they're going to take. I think that the difference is that they're going to take away some of their items that they've put in their investments in, and start giving those back as either dividends or just increasing on the share price. So that's why I like them.
All right, guys, we're going to take a couple questions from people. If you are in the chat and you had a question, I can go up and look at some of the other questions. Someone said, "What are your thoughts on QQQ?"
Oh, I like it. So technically, you asked me about stocks and not ETFs, right? Um, so the Qs are fascinating. Qs are going to go down tomorrow because Nvidia reported, and Salesforce, as part of the Dow, they kind of tanked. But the Qs are a great way to get broad exposure to individual tech stocks, right? And I've actually been putting money. Actually, when about a month ago, when things went down more than they should, I started putting some money into the Qs. I put some money into the Qs today, actually. I'm building my exposure. I'd say out of all in my personal portfolio, um, it is the second or largest holding that I have. Right. So my largest is always, I tell everybody, it's the S&P 500 ETF. It's just a general thing, gives me some exposure, and then I think it's like Apple, and then it's the Qs. I think that those are my top three, holdings. Again, not reflective of the balance that I have, throughout my other stocks, because I do have a lot of other things that are in there. But I think that if you look at Jackson Hole, okay, so Jackson Hole is a place where the Fed comes out and they're gonna either talk more about raising interest rates or not. But I plan on putting more money into the Qs after Powell has his little discussion at Jackson Hole. And I may be missing something, but I'm okay with that. And I think that I will be putting smaller sums of money into the Qs, especially during September and October. Again, it's not the point of emphasis for my investments right now. Because although I put some money into the Qs, I'm putting a whole bunch more money into oil, So, that again is the balance between like I don't know what's going to happen, so I'm going to have technology and growth in one hand, and commodities and so forth in the other hand. And but the Qs is a great way to have overall exposure. So
Now,
great.
what's your thoughts on EV stocks? Because California, your home where you at, man. They just announced that gas vehicles will no longer, they're banned. You can't sell them after
Yeah.
2035. So
Yeah.
that's basically a decade.
Yeah.
So
So, Tesla, by the way, not even that, but the infrastructure bill that was just passed, right? Um, it it basically for solar powered, it really put a lot of incentives towards, you know, saying that these tax credits are going to be greater than they were historically, and they're predictable. Now they're going to be like 10 years into it. So I do think that um, solar, EV, renewables, even nuclear power is a good play. Um, but then it just gets into valuation, dude. Like, I mean, it's just like, I mean, yeah, I mean, there's a good company and a good stock price, two completely different things, right? So,
mm,
I Nvidia
break
is
that down. Break that down, because I think people that might have went over people's head. A good stock or a good investment in a good company are two different things.
the two different things, right? So, I believe in Tesla, right? I believe that Tesla dominates the market in EVs. I believe that it has such a head start on Ford or GM or any of like they're wonderful in terms of their manufacturing, their plants. Musk is absolutely off his rocker, but dude, he knows he knows the EV game. Okay, now does that mean that when Tesla was valued at 1,200, per share, that's a good just because the company is firing on all cylinders, and that's when it became profitable? Was it really worth 1,200 per share? Right? Probably not. Right? And because if everything is based off of a price to earnings ratio, and that that there's um, a lot of price, very little earnings. You know what I mean? Now it's growing in earnings, but the question is with interest rates as they are, one, so can people afford these Teslas? Are those interest rates going to induce a recession in which people are generally buying less? I actually don't think that that's the case. I think that there's so much pent up demand for cars specifically. Like people are going to want cars. But then three, the supply chain issue from China, it's going to stop just the total number of cars that can be made. Do I really think that they can hit this out of the park? There's a lot of headwinds for that. So I love Tesla as a company. They're at what, like 860 or 850 today? I can't remember. I think it's somewhere around there.
Mm-hmm.
Do I think I could get it in the 700s again? I do. And so, that's just me. And I'm like, well, what am I paying for right here for right now? Again, so, like the Qs, because Tesla's part of the Qs, like I'm really looking at some of these growthy, type of plays. I'm looking at, September and October, because I think that that's when the market in general, that's my best shot of it going. Now, if it doesn't go down, I'm still exposed. I'm not, right now, I just want everybody to know I got about 20% in cash, which for me is on the higher end of cash. But I just think that I'm going to have some opportunities. You know what I mean? So I'm invested, but maybe not as much as the 95% that I'm used to being invested.
Now, this is a good question. I don't know why they didn't comment it. They just sent it to me on Instagram, but I'm gonna read it.
Mhm.
So when is a good time to sell a stock? Because we talk about getting in the market, investing in it. So
You know,
what?
great.
uh, So do you make your decision to? Some people say you make your decision to sell the stock before you even get into it. So what's your philosophy on that?
Yeah, those are the most disciplined people. So, and I'm not going to get too technical here, but when you purchase a stock, you could say to yourself, "I'm going to sell this stock if it goes 5%, 10%." It's called a stop, right? Where if it goes down below this amount, I'm just going to sell it. All right. A lot of disciplined traders do it that way. All right. And again, that's more of a trading mentality than necessarily an investing mentality. But you can put those stops in, and that is the right way for a very disciplined trader to kind of think. But it is very technical, you know what I mean? And there's more to it than that. I I believe in the technicals, but I also understand the fundamentals, and I also understand the momentum and all that stuff. So I'm I'm much more of a, I'll tell you, like my favorite stock of all time has been Nvidia, right?
Yeah,
Well,
yeah, yeah.
I tell you, like, dude, I love Nvidia. I love Nvidia. Made hundreds of thousands of dollars off of Nvidia. Nvidia's a great stock. Love it. But when was it a great stock? It was great during the growth part of it, right? Now Nvidia has been cut in half by 50%.
Yeah.
They reported their earnings last night. I mean, actually tonight, and they're down another 4%. Right now, I have zero exposure to my favorite stock, my favorite company that I've talked to you for years about when it was going.
Yeah, yeah. I was gonna ask you about that.
No, when, but I also told you when I was selling it. I was like, and I will always remember that Black Millionaires because everybody was, I could just feel everyone looking at me like, you are the most boring guy. I was like, I know, this has been great. Interest rates are rising. I'm buying banks and oil. That's it, guys. Everyone was like, what? And I know one of your favorites is like Shopify. It's like, I love it as a company. I'm selling. That's what I'm saying. My favorite ones was, dude, you know how many times I was like, dude, get NVIDIA. And that thing shut up. So I think that I sell stocks when the market conditions, no matter how much I love the company or how great it is, if history is telling me that like it's not going to work, I'm either going to lessen up on it, right? I mean, in this case, I sold all my Nvidia because it was like the price to earnings ratio was like 60. It's like, why does it like it cannot exist in an 8% interest rate environment? Like it just can't. Like there's no mathematical way that it could, right? And so when I saw it going up, I was like, this is when it's about knowing why your stocks are changing, not the fact that they're changing, right? There may be, for example, if Apple goes down because China shuts down, like this happened to Nike, right? If they shut down and they're not able to sell stuff because of COVID, well, China's not going to stay shut down forever. You know what I mean? So why am I going to sell it? You know, but interest rates I think are going to be there for a while, and so it doesn't make a lot of sense. So sell stocks based off of how the company's doing. If they're not meeting your expectations, or whether market conditions change, and they do. The older you get, you're going to see them change all the time, you know, and you're going to be like, I remember this, right?
Right.
Don't just hold on to them thinking, well, Apple's going to be great forever. That's a limited way. You know, you got to understand the why.
All right. Someone said any thoughts on investing in Hyperverse? Are you familiar with that company?
No, sorry.
I'm not familiar with that company either. So I thought it was something that I just wasn't really familiar with. All right, let's go to some more questions. A lot of people had questions up here. Um they say he said something about solar companies. Now we asked about the QQQ. Um all right. This is a personal question.
Okay.
Okay. When do you make a decision on, because some people they only have a certain amount of capital, right? I'm not saying you have unlimited amounts of capital, but you have more to park into
Sure.
different places. What percentage of your portfolio or your risk tolerance allows you to invest in things that could completely go to zero, and to things that are hardcore assets like real estate and things like that? You
Great
see what I'm
question.
saying?
Yeah, no, I get it. You know, like one, the stock market never goes to zero. All right, stock market can
That's
go
what I mean.
down.
Yeah, that's what
No,
I
no, no,
mean
no,
by
no,
something that's
no. No. You're making a great point. Like in my mind, right? I'm giving you my views. Could I lose 60% of what I have in the stock market? Yes, right. And I've already told you 60% of my net worth is in stock, and I lose 60% of it. That's let's say 35%, 40% of like me just losing shit. Like that's a lot of money, right? But then there are other things that I invest in. I invest in movies, right? I put 250 grand is the last movie that I did, and of a $5 million show or something. So a lot of other people did something or another, right? And if it's not sold, I could lose all 250 of it. You know what I mean? And that's not like, oh yeah, I just lost 250. It's like, no, that sucks. You know what I mean? So relatively speaking, however, even for people with higher net worth, is like, well, 250 isn't going to, fortunately, is not going to take me out. But I'm not going to put any more than that into something that could just be zero. You know what I mean? So, you know, real estate, right? A lot of y'all have only seen prices for stuff go up. Well, if just today it showed that the housing values have gone down for the first time, um, most drastically since 2011, right? So,
Wow.
you're actually seeing, because interest rates go up, housing is always the last thing that drops, right? You're seeing these house prices go down, and so it's to what degree, and we in investments you call what is the beta, right? To what degree of change are you okay with seeing things go up and go down, right? And so I would say, um, I understand that everything's going to go up and down. It's just the way things are. Um, I would say I put a very small amount of things that will of money into things that can go to zero. Although, and I've had things that go to zero before, and it sucks. Okay, but I would say probably only like 5% of, well, dude, look at crypto, man. I've lost probably 40% of what I've been into crypto. Put $10,000 into crypto. It's like,
Right.
but it's still like, it means I lost, 4 grand
Right.
on crypto. I'm glad that I didn't do more. But even crypto is I'm still not sold on whether it will ever really recover. It's not zero. It's just a lot. So for
Yeah.
young people, absolutely bet the farm. You have
Yeah.
plenty. Listen, I mean, if I'm telling you all my losses, I mean, the important thing for you all to hear is like, dude, I totally lost stuff, right? Like, I'm not just. There is risk that comes with the reward. When you're young, dude, this is when you lose it. You got the rest of your life to make it back, right? So, yeah, don't just make stupid risks, but like calculated, things, and vet them and so forth. But um, yeah, I tend to just have good investments that can kind of get you from A to Z.
Yeah, because I seen someone had a question about investing in NFTs, so this is a good way to transition to that.
Mhm.
NFTs are one of those type of investments that could go to zero because hold on, because you're not supposed to look at an NFT like an investment. Because if someone is selling you an NFT like an investment, then they have to register it as a security. So now it goes into a whole nother.
Well, I mean, if you look at the CFTC is now looking at crypto, right? Before there was no regulation, right?
Yeah.
Well, in full disclosure, my twin brother is on the board of directors for these pay for a PayPal crypto company and on Fannie Mae and all this other kind of stuff. And um, you know, he's part of a regulatory arm that looks at all of these different alternative investments. And now cryptocurrencies are going to become securities, at least some of them, depends on which ones you're looking at. They're going to be regulated by the CFTC, which is everyone's like, well, is that a good thing or a bad thing? Maybe it's a good thing because you're going to have more investors because it's not just funny money, right? But then at the same time, well, maybe it's a bad thing because now there's regulation. NFTs, same thing. I don't think that they're highly regulated, but like you said, it's all speculative. And I would encourage young investors to get a solid grasp of like proven things that you know that work for a larger number of people, right? I mean, it's not sexy, but like S&P 500, dude, you put money into it, you'll do just fine. You're not going to lose money over the long term with that investment. I can't say the same about a lot of other things, which I've
Right.
invested in. So I'm just again, I'm throwing all my losses out there just so you can gain perspective.
Oh, this is a good one. Is it smart to get an insurance policy to pull from? So, the different insurances, term insurance, which is, 10, 20, 30 year policies that expire. They're relatively cheap,
Mhm,
especially if you're young, but
mhm,
you don't get no type of investment out of
mhm.
that. So if you pay for 10 years straight and obviously you don't pass, that money is going to the insurance company.
Right.
However, there's different like whole life and universal
Yeah.
insurance policies that a lot of companies sell as an insurance policy and an investment product. So this is a good question from someone who's really you're really into investing, you're really into entrepreneurship, you're into
Yeah.
business. So
I think it's a
what
great
would
question.
you
I think it's a great question. So I put a ton of, to answer your question, I put a ton of money into whole life policies. And so there you go. Now there's a reason for that, right? In that I think that typically these are relatively illiquid accounts where you have to put a certain amount of money in to get a benefit every month, over and over and over and over again. And you actually lose money because you're putting money into something. If I put in, let's just say, $1,000 a month, I'm only seeing $800 of it actually, or probably even less than that, probably like $500 of it actually settle into the account. But the
right,
thought is, if you're able to put money in over the long term, typically 7 to 8 years, you kind of level up, and then you will be able to receive those dollars tax deferred at any time you want, right? And so if you are, I would recommend those type of products for once you've made some money, you're looking for, you've already put some money into the stock market, and you're looking for tax-free income later on. The trick is you must say to yourself that you can invest every month for 7 to 8 years, right? That's a long time, right? That's a long
yeah,
time
that's
thinking,
very
I'm gonna
long.
have a job. Now you can stop. It's just that you effectively have lost money because the money that you put in is not equivalent. You haven't leveled up to that amount of the premium, right? Um, so I absolutely have done the have had those policies for around that time, around 7 or 8 years. But I've done them. That is one of my tools to diversifying um, for later on, because whenever I draw money out of the stock market, I'm going to get either short or long term capital gains. But I put money into pension accounts, and I put money into whole life accounts. And so I think it's a great question. It's a very educated question. Something that I would definitely do. Um, Only if you know that you can commit to whatever payment that you're making for an extended period of time. But it's a really good option for you.
Yes, I think that's really important. And what I love about what you said is you gave an answer on what you're doing, and you gave an answer on what a lot of the listeners could do, because you didn't say everybody should have a whole life policy or everybody should have a term
Yeah.
policy. You said when you first started, you started investing, building your wealth, and you had access money that needed to be diversified out. And
That's
I'm
right.
not saying everyone here doesn't have access money, but it's different levels. So some people, if you're just getting your business started and you are just starting your investment journey, it may not be the best way, the best place to park your money at the moment into some insurance policy, because like he said, it might take 7 to 8 years for you to kind of break even, and then you start to see the benefit of it. So if you don't have a long 10 to 15 year
Right.
um outlook on it, it may not be the best thing for you at the moment. So start investing. It's good to invest. Start investing into your brokerage account.
That's right.
um Start to diversify, invest into your business, and then that's something you can look at down the road once once you get some wealth, once you get some type of wealth under your
Yeah.
belt.
Totally agree. Couldn't have said it better.
All right, let's get it. We're gonna wrap up in a couple. We're gonna wrap up in a couple minutes. Hold on, let me see something. Something just it's froze up on my end. Are you there?
Yeah. I'm here. You hear me?
It's like froze up on my end. So I guess if you can hear me and y'all can see me, I'm good. But it froze up on my end. Let me try something here.
I guess you guys still see me. Yeah. I do think, just for anybody, I know he's going to hop back on here. That Oh, there he goes. You hear me? You see me now?
All right, I'm back.
Yeah.
All right.
We good?
Yeah, I'm good. Go ahead. You can go ahead.
No, I was just saying. I was like, I think that you articulated that very well. It's like, there are certain things you want to do at certain stages in your life, and um, getting a piece of the market. My daughter's 15. Um, I got her a Bloom account, parent custodial account. You can put in $100. You know what I mean? She can't do anything without me, taking a look at it. But just to have her see, what did she get? She got Disney. Of course, she got Disney and Netflix. Right? I don't think that Disney and Netflix are great investments. It's fine. I want her to see that money go down. I want her to see and to feel it go down, but then wait in X period of time to see how patience is on her side. Time is on her side. So, the insurance pieces of it, like I said, you're going to be able to do that, later on.
All
Right.
right. So I know a lot of people been waiting on the top 5 stock picks, so some stocks that they can look up and research themselves.
Yeah.
Um Looking into the future, because you're always coming in here and saying something that might not be sexy. They're not talking about it on TV, but
You're
then
gonna
we
hate me.
come back. Then we come back 2-3 months later or whatever, and we say, "See, this was the play that we should have did." So, give
Well, I
us.
mean, right. I would say, like, again, these are just, my personal advice being there. And I think that I can't tell you how long interest rates are going to be high, but I'll say this, while they're high, these are my, I think that they're going to be somewhat higher, but things that you can do to kind of balance them, right? So, um, my first pick, like I said, is the gas and oil industry, right? And you can do this all kinds of different ways. I think that one of the best companies to do that with is Pioneer, ticker PXD. Okay, easy oil and gas. If interest rates rise, I think they will. If oil rises, I think it will. Then I think, especially in the shorter term, um, I think
You
it's going to do. It's
Did you say
what I think.
PXE or PXT?
PXD, D is in dog.
All right.
All right. Um, Second, I said Amazon. Amazon's a great company. We talked about that before. I think that Amazon, out of all the big tech, it hasn't run up as much. Um, the e-commerce part of it and the multiple is a little bit more tolerable, and it's sitting on a bunch of cash, which ultimately was going to revert. I would say that I probably have less conviction for Amazon than I do with any of these other picks, but you gotta put some growth in there, right?
Mm-hmm.
And I would also say, if you want to substitute that out with the Qs, go ahead. You know what I mean? Like that. I know we're talking about a stock versus ETFs, but I would heavily balance that. Second, was that my first or my second?
No, this would be your third one. You said
Oh,
Pioneer. You
third.
said Amazon.
Yeah, I think fertilizer is huge. Ticker MOS, Mosaic. Okay, Mosaic is a company. So Ukraine and Russia are at war, and Ukraine is a huge producer. Remember when I talked about commodities and I talked about gold? That's
Mm-hmm.
one of those kind of like commodity plays where I think that it's already, by the way, it's run up. Mosaic. Oh wow! Today it was up 6%. Okay, I've had this as for a very long time. I've got some pretty heavy returns on it. I don't think that it's going anywhere because these are the types of, of investments you want to make in a high inflation environment. Hard stuff, believe it or not, fertilizer. So that balances out again. If you really think about it, like the oil and gas thing, the commodity thing, the Amazon thing is definitely a part of it. And again, I'm trying to give you guys what I perceive as a more diversified, type of base. I'm gonna give you one that's super growthy. PayPal. PayPal. Think about PayPal. That's PYPL. PayPal is already up about 16% off of its high. It's a super growthy company. It's going to suck with interest rates going up, right? It's not like Block. It doesn't have the heavy cryptocurrency exposure, but it's a company that has had its challenges in terms of its operation. It's gotten a lot of it together and it's actually improved, right? So if you notice, what I've done already is I just gave you two commodity inflation plays and two growthy plays so that regardless of how the economy tilts one way, when one does well, the other one won't. It's a more balanced approach. Now it's up to you as to saying, well, how much am I going to commit? Each one of them, right? And then you know, it's I wish instead of five, I'm like, should I give you six? But um, so I'm gonna give you a couple of them because the you can always go with Apple, right? So
Yeah.
Apple's is like it's not a real growth stock, but it is a real growth stock. It's like a utility at this point, right? Because
Mhm.
everybody needs it, everybody upgrades on it. Even when things get expensive, um, they tend people tend to go out and purchase it. Apple does a ton of stock buybacks. Um, it's at 167 now, right? It was at 175. I purchased a ton of it when it was at 135 during the June lows, so it's done well for me. But it's one of those things where it's kind of a more stable stock. I think that the direction of Apple is the direction of the stock market, right? And because it occupies such a large percentage of all of these index funds. But especially if Apple sells off a little bit into the low 160s or high 150s, like man, I'm going to be buying some. You know what I mean? I think that in the long term, you should be doing well. But again, any growthy names, I'm just a little bit more conservative with. I think if you look at sectors, you can't go, like I said, if you want a little Exxon Mobil, if you want, Chevron, if you want to go with the pioneers, I think that you're going to do well with all those. Um, and the fertilizer stuff, I think you're gonna do well with. And then I think you're gonna do well with banks. So the best bank that I like is Wells Fargo. All right, WFC. Wells Fargo is more tuned to higher interest rates than Bank of America, than some of the larger banks. There are some regional banks that you could choose from as well, but banks, again, if you believe that interest rates are going to go a little higher without being tipped over into a recession, that's it. I didn't talk anything about healthcare. If you guys want to look at any of the healthcare stocks, they actually do well with higher inflationary um, 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 environments. Merck, what is it? I forgot Merck. Is it MERK or I forgot their thing, but MRK. Merck is, if you're going to get a healthcare kind of pharmaceutical stock, if you just want to balance it out, that's my favorite name in that sector. So again, the point for all of these is not to say that like these are magical stocks, but if you decide not to choose them, just get some balance so that you protect yourself in whatever way it's going to go. And you're going to have ups and you're going to have downs, but I don't think that this is going to be um, Amazon's not going to be the leader here. You know what I mean? I don't think. I mean, Apple kind of is a slow and steady type of type of stock, but I think that the leaders in the market are going to be things that, um, I think gold is fine, but gold is not technically a stock, or Barrick's gold or whatever. But it's the oil, it's the gas, it's the commodity trade. Those are the things that do really well. So
All right. And then one last question. Research, right? Are there any areas, any websites, or anything that you particularly do research on when it comes to making your investments? Because we are not advisors, we're not telling you to go get these stocks, but
sure,
we are encouraging you guys to go do your own research. I always tell people, don't even listen to me, don't listen to the people I bring on. Go do your own research. You're getting this information from us to go out and do the research on your own so you can make an educated decision for your financial future.
yeah,
So, what are some ways, or what are some things people need to look into when
yeah.
doing research on any of
You know,
these companies?
when you said, I was listening to CNBC. CNBC is totally, some of the shows on CNBC are very much so kind of tailored to retail investors, right? Some of them are a little bit more higher end, but just going on CNBC.com and just kind of reading over and over and over again is what I tell my daughter to do. It's like it's a wonderful day to understand macroeconomics. Like, don't if you're first starting, please get an ETF. Please, I don't know how I can say this. Do not start stock picking if that's something that you don't normally do. Please just get an S&P 500 mutual fund and call it a day, or total stock market index fund. Just don't bet a large amount of money. Just have it sit there and learn and read. Bloomberg's is great. CNBC is great. You don't even need a subscription to kind of pay for, but these are kind of like the base level pieces. I think, unfortunately, when you start going to the New York Times and Wall Street Journal, it's a little bit more antiquated. So, information that's consumable. It's you can hear differing opinions. It's great to just understand the language and the vocabulary of the market, right? And so I think that those are some of the easier points of reference to get.
All right, man. I appreciate you guys. I want you to make sure you go follow the Savvy Doc on Instagram. I know a lot of people are probably gonna have questions and things like that. So,
Yeah,
just
in building my own business, I kind of went away from a lot of my stock stuff, and I'm gonna start doing more of that. You inspire me, man. I'm so proud of you as always. Y'all don't understand this dude. Yeah,
I appreciate that, man.
he's doing it, man. He lands in LA. It's like, yeah, I got to do this guy. Like, he's really doing it, and keep staying humble, man.
All right, man. I appreciate that. I appreciate y'all. If you guys want to do me a favor, make sure you like this video. Make sure you subscribe. That helps us with the algorithm, gets this out to more people like yourself who are interested in finance, business, entrepreneurship, and leveling up your life. Um, Again, I thank you. Thank you for your time, for coming on here, man. I know you're a busy guy.
Of course.
Um, so anytime you want to come on here, man, I love to share the platform and
So, yeah.
share the information with with my peoples. Like I said, I could probably get you on the phone and we could talk about this for an hour, but it's like let's do this in a public forum because I want people to get this information, and I really appreciate you for coming on and
No. Listen,
sharing it.
listen. Keep up with the mission work, brother. All right, because like I said, it's all about you got there real quick. Okay, but just make sure you're bringing up those around you. All right, so keep it up, man. All right,
All right, man. I appreciate it.
take it easy, bro.
All right, guys. Make sure you follow. Make sure you subscribe. Make sure you guys subscribe, like the video. I really appreciate you guys. I'm thinking about doing this every other week or every week or so you guys can give me some feedback on if this was, worth your time because it don't cost you any money, but time is money, so it costs you your time. Um, I'm looking into doing this a lot more often, just getting some of my mentors to come on here and share some of their information. Again, a lot of this conversations that we have offline, and it helps me out, but I want to be able to help you guys out. And if this is something you guys would like, um, my team to continue to do, then just give us some feedback. Make sure you guys share this out. Make sure you guys like, subscribe. I appreciate you, and you guys can have a great night.